Let's talk market fundamentals in a Street View segment. Ritu Arora, Chief Investment Officer with Can Bank, HSBC, OBC Life Insurance joins us. Ritu, good to have you back and thank you for joining us. What do you make of this market frenzy? As of now, everyone has bought into the thought that NDA will come to power, we will have a stable regime, and a stable regime will kickstart a new economic cycle.
Thank you for having me on the show, and you called it frenzy. And I think that's what it is. There's a lot of euphoria building around the election outcome and a strong, cohesive government in power, which will be great news. I see it more than the event itself and an immediate upside. I see it as a trajectory for the economy and markets changing if this plays out. And there should be good couple of years ahead for the market starting here. And then we would definitely be able to say that the worst is behind us. So it would be a good change of momentum direction. But I would not build in too much more into the event per se anymore. I think enough frenzy and euphoria is already built in, and the best is already being discounted by the market.
So, Ritu, how would you, advise investors to approach from today up until May 16th and even the week following that? Is it best for retail investors to just book out right now and perhaps wait on the sidelines to see what really transpires in May 16th and thereby escape the volatility that the event may play up?
As an investor, I definitely think this is a period when one would like to be very cautious. Definitely new positions would be very expensive to make at this level. But one should not hold too much cash. I hope people are reasonably invested and can at least perform with the market. I see some profit taking coming in post the election results, irrespective of what the outcome is. If the outcome is disappointing, there could be a sharp correction, even 10%. But even if the outcome is on expected lines of a strong government, I would expect some profit taking to come in and market to stabilize after a small upside. So I do not see the market giving a 10% return, even if the favorable election result plays out. But like I said, from long-term point of view, if we do see some consolidation in the market, it is a very good time for investors to build in positions, even in stocks like infrastructure, where the run-up has only been based on anticipation at this point in time. From there, it would start getting into the numbers, hopefully. So it would be a good entry point if we see some consolidation.
For the longest time, you've been advocating that, look, I'm happy to own defensives. I don't think there is a lot of earning visibility for cyclicals, industrials, or engineering stocks. Has the style of this market changed? Because defensives are not making money, IT stocks are coming down, and if rupee appreciates further, IT companies will start contracting.
The earnings growth is still being delivered by the export-oriented sector and largely IT. If we are looking at FY15 and talking of earnings growth of 12 to 14%, IT will be the one which will give much higher than that, in the range of about 20% earnings growth. So IT still finds a good place in my portfolio. Yes, appreciating rupee would be a dampener, but all other fundamentals, including demand, which is bouncing back in developed markets, is a positive. Inflation is controlled and wage bills there. So I still like IT stocks. But it's not a defensive portfolio that I'm advocating. I'm advocating a balanced portfolio. We still have value in infrastructure if we see the trajectory of the economy changing. At this point, I'd like to be poised with having a good mix of banking, private sector preferred, IT, a little bit of caution built in form of FMCG, pharma, as well as a balance of infrastructure, cap goods, auto in the portfolio. So a balance is what I would advocate at this time, rather than a high beta kind of a strategy.
What's the view then, Ritu, on banks? Because what has transpired in the last 2 days has purely been a banking-led rally, and you've had the likes of an ICICI Bank, HDFC Bank, Axis, and even PSUs at large really aiding the market move.
Yes, it is, and banks, I'm not surprised, are leading the rally. It is the largest sector in the economy and reflective of the way the economy would be. So being the other side of the coin of economy, if there is buoyancy being built into economic growth, banks will perform. But if you look at the fundamentals, specifically the PSU bank results, they have been quite concerning, most of them. So hence, there is an upside cap to the kind of upside these banks can make. I think the bottom, the support comes from the fact that we believe the worst is behind us. With these elections and a definitive mandate, things will only get better. So that gives us support. But there's also an upside cap which the fundamentals of the banks themselves are putting on the sector and on the stock prices. and hence I expect some soberness to return around the elections and some consolidation. Private sector, of course, is better poised than public sector, but even there, relatively, they are well priced now.
So, Ritu, let's work with the assumption that markets get their way or markets get what they want on 16th. So after the recent run-up, which is about 20% on the Nifty, what could be the immediate upside for the market? And if Nifty goes to, let's say, 7,500 or 7,600, will you be a seller?
If the index starts 7,500, I would think definitely there is a case for selective profit taking and reshuffling of the portfolio, especially if the election mandate plays out in the definitive manner. It does require a rethink on the strategy because, like I said, from that point onwards, we would like to start believing the worst is behind and the economy comes back on growth trajectory, which means there should be good money to be made over the next 3 years. And all those stocks which are reflective of the change and the trend in the economy should be bought into the portfolio. So the stance would then change from a balanced portfolio to one which has more weightage to these sectors which will lead the recovery.
Okay, Ritu, many thanks for taking the time out and speaking with us today. That's the view from Ritu Arora. Let's take a quick break on that note, but the last phase of polling now gets underway as 41 seats are up for grabs.